Right. Hi, everyone. Welcome. Right. Sunday. Welcome, everyone, to another session of stock nitpicking with IMP. All right. This is Terence and Jeremy hosting the show already again. Okay. If you can hear us, drop a note, say hi.
Hi, everybody.
Yep. So we know we are ready to go. All right. Great. Okay. Hi, Josephine. Hi, Uncle Fu. Okay, all right, now, so it seems like everyone's ready and everyone's raring to go. So let's get started. Hi, once again, good afternoon to everyone. Welcome to another session where we're going to analyze a stock and potential trade ideas that we will have for the stock itself. Now, so the weekly segment for this stock nitpicking will be held by myself and Jeremy. All right, so it's the same this week as well. And welcome to a Sunday session. Okay, now, so what do we have in store for you today? All right, it'll be something a little bit different, I would say, Jeremy.
Yeah.
Yeah, all right, slightly different kind of stock over here. Yeah, all right. Hi, Maureen. Hi, Jim. Okay, now, so if you could do us a favor as well, click on the share button, share out the videos to provide stock ideas to your friends who might be investing as well. That would be awesome. That would be great. Okay, hi, Andrew. All right, now, so Ikai, hi as well. So help us click the share buttons and we will get the session started. Yes, Andrew. All right, no worries. Okay, I hope you enjoyed the session yesterday. Okay, hi, City Chai, welcome as well. Okay, Jeremy, shall we get the session started and rolling?
Yeah, sure. Right, and let me just start the session then. Right. Good afternoon, everybody. Right. So, maybe before I dive straight into the company that we'll be talking about today, just like to share the train of thought like before we look into the company today itself. Now, I think by now you should have realized that after the COVID-19 has rampaged through the economy and global industry, we would have seen that there's a shift in the underlying assumptions that actually governs the business environment and the how businesses have run right for the last 20, 30 years time. So it's actually essential, right, for us to start to figure out what is the next type of company that will actually be able to retain and be able to stay profitable in light and despite of these changes to the baselines here. The shifts, as I will call it with my discussion with my friends here, hasn't really stabilized. So it's still actually a challenge, right, for us to identify the next type of companies that actually we can invest into or we can actually take decisions into. But I think there are a few types of industries that actually starting to stand out. Like, for example, tech companies, pharmaceutical companies, and companies that actually got to do with more working away from the office. They are kind of like taking advantage of the current situation here. Now then, the situation here begins is the second set of problems, which is where these companies, before the COVID-19 situation, they were kind of like under the radar because they weren't profitable or they had other issues with the company as well. So if you were to invest into these companies now over the last maybe the 6 to 7 sessions we have shared and we've warned continuously that if you were to invest into these companies now, you will see the risk of overpaying for these stocks. Yeah, I think the classic case, just to showcase an example, is Kodak. I think what Kodak did is there's no fault of their own. They just weren't able. They were able to benefit from a loan given to them by the US government, but there isn't any changes in how they're going to run the business. But we see a very drastic ups and downs in terms of how the stock price moves. So right now, the context is to how we're going to look for companies that might still be under the radar, is going to be profitable in the long run, ideally now, and will be able to benefit despite the changes in the baselines of the business environment. All right. So I'll dive straight into the company now, so you can understand why are we looking at this company, even though the tone, the direction of this company is not so straightforward as what we have shared with the other companies in the past.
Well, that's kind of the interesting thing about the session that we do every weekend. So we actually start to actually move a little bit out of the comfort zone of what we call our IMP basket of cash flow stocks, and we actually bring in what we call undervalued stocks that we believe in, or sometimes even overvalued. So we'll be looking for short plays on them. All right. So it's really to kind of broaden the horizon for ourselves, together with our investors and our followers as well, okay, to have different ideas and concepts about how to invest and what kind of trades they can take, looking at stocks and the entire stock market in different ways.
Yes, I think Terence, you brought out a great point here. So I think over the last few sessions, we have consistently also mentioned that we mentioned that we are not going to be always right, but these are some companies that we find that they are interesting and they are worth our time to be looking at, to take positions, or to even parking our funds, part of our funds into them. So if any participants feels that there's anything that they are not comfortable with, or they know anything about this industry, because they might be the experts in this field, then by all means feel free and drop us a question in the comments during the session as well.
Yes, definitely, because with investments, right, there's so many what we call different ways, all right, and how things should be done as well. All right, so there will be the core portfolio where you should be building with 70-80% of your entire investment capital, and there's always what people say as the speculative portfolio, where it's meant to be the driver of the total returns if you do have a very good year. But on a difficult year, it doesn't really impact the total returns of your portfolio as well. So this is what we call the play money portfolio. So, different stocks that we cover in the session like that, all right, it's actually meant a little bit and catered to many different purposes as well. All right, so, do weigh once Jeremy is done, once I'm done with the outlook or the description of the stocks, to believe which category that this particular stock should fall into. All right, and then allocate the correct amounts into how you want to trade the stock and the opportunity itself.
Right there, Terence, I think I won't keep them in suspense anymore. Right,
Yes,
get ready your seatbelts. I'll be very fast with this. Okay, company we're looking at today is actually Micron Technology, MU. Right, there's a summary for some of you who might not be aware of this company. Micron is in the business of semiconductor systems. It has a wide range of a portfolio in the memory technologies. Right, what they do, they actually sell some of these things called DRAM, as well as the NAND flash, as well as NOR flash. Basically, this company, right, what it does is that they're into the compute and networking business, whereby they handles the chip, the solid state drives, the technology under them. So as I was doing compiling the summary, the profile of the company, I noticed that the business, right, goes into multi-facet in terms of essentially anything that uses semiconductors, they might be linked to this company as well. We're looking at maybe mobile phones, we're looking at retailing consumers products, storage in terms of like cloud computing now. Yeah, so this company is very well entrenched into the current technology aspect of the business environment. Now, from the think of swim profile under the what drives the stocks, right? So you can see that there's about 2/3 of this company's value coming from the core DRAM of the business. Now, essentially, this part of the business is actually expected to grow in terms of their revenue. And if let's say you're interested, you can read out more into them as well, right? So to the takeaway from this is that actually the device that you're using to watch this sharing today, be your laptop, be your mobile phone, right? A lot of these technologies actually are involved, are actually taken, will be linked from what Micron does as a very business. So I think in terms of like moving forward from COVID-19, it does sense a certain sense of advantage when it comes to them moving forward, right? And let's look at the trailing returns of this company. Now, from the Morningstar numbers, right? Morningstar numbers as of the June 30th, 2020, the company is actually trending very closely to the industry of the semiconductors. You could see that since 15 years numbers as well as the 1 year's numbers, right? They are essentially almost like a replicate of each other. So there isn't actually like an edge in terms of company against the industry. Now, if I move forward, the book value of the company is actually very close to the current trading price, if you ask me, right? And we can also see that on its own, the price of cash flow, price sales, and price earnings, these three price over something ratios, they don't seem to be too inflated in the aspect of the tech or the semiconductor industry right now. Of course, as I mentioned previously, right, when you do a kind of analysis on this aspect, it is always good to do a comparison, be it against company's historical value, the average, or against a competitor, or even industry. So you just try and get a feel of these numbers by looking at it on its own right now. And I don't think that there's anything like bad or anything that is like glaring enough as a red flag for time being. Moving forward, we see that the revenue as well as the operating income of the company has been on a growth, it's been growing. Now, I need to emphasize here is that if you see these numbers, right, for the growth of the revenue as well as the income, it's actually as of last August, 2019 August, all right? I think this is because the full year return for 2020 as of the financial year from August 2019 to 2020 has not been announced. But still, we're going to see that at least as of until last year, the returns is still respectable. And let's just wait patiently as we wait for the results for 2020 to be announced as well. And for the financial health aspect, right, we see that as of the last reported numbers, May this year, right, company is actually able to maintain its short-term coverage and is also able to cover for its interest payment, and the level of debt against its equity doesn't seem to be too excessive at the moment, right? And the company is currently profitable, which is a good sign because post COVID-19 or even now, a lot of companies are actually struggling to be profitable. Looking at maybe like retailing and other companies, that suffers because of footfall and traffic. But for Micron, because of this business model and the way that the product is selling, it doesn't seem to be affected as much as the other other industries we're talking about. So this is a good sign. We can continue to look at the company, right? And now here, as we move into the income statement, right, you can see that the revenue as well as the operating income, it seems to be not so consistent. And if we were to just use the net income as a simple way to look at it, right, it seems to be actually slowing down. But if I look at the trailing 12-month numbers, and the main thing is, right, we see that this is still positive, which is a good sign because this shows that despite the current challenging business environment, right, the company is still actually able to make a profit. Not too much of profit, but still actually able to make a small volume of profit. The earnings per share, right, which is diluted, is also positive, which is also a good sign, right? So overall, while the numbers are slowing down, I would say that this is like end of the world numbers for the company as well. In the assets as well as equity, this is the financial statement for the balance sheet. We could see that the assets, right, from the last reported for the quarter, right, for this year, right, it's actually growing, as well as for the equity is also growing as well. Now, end of the day, right, we just want to try and make sure that, right, there's no attempts, right, by the company to actually dispose of the assets, right, just to pump up the equity numbers. So assets actually going up and equity is also growing up. So there's less of concern in this aspect here. And there's another thing which is like I need to point out, which is the debt of this company, right, is also growing as well. So just need to pay caution and make sure that this doesn't go out of hand to the point that the total equity of the company is actually falling, right? And if you see, now this is the part that I'm not very comfortable with when I was going through the numbers here. Now, in the cash flow snapshot of this company, current trading 12 months, you can see that the free cash flow is a 0.3, which is a small positive number. And the operating cash flow is actually positive, which is always a good sign, because I did mention previously that as long as the operating cash flow is positive, it shows that this company is by its core business revenue or core business activity is still actually able to generate a good, strong revenue. It's not taking in money from things that is not pertaining to this business, be it like a loan that they took it back, or a financing activity. Now, this 0.3 free cash flow coupled with the positive financing activity of 0.76. Now, if I were to interpret it very simply, it means that I think they took on a short volume of loan, right, just to cover for their free cash flow, so that they can sustain the business in terms of the cash flow requirement here. So this is not a good sign sometimes, but if I were to look at the overall value in terms of their assets, assets here, and the level of their debt, as well as the fact that the equity is growing, right? It doesn't point to a full all-out doom and gloom situation. We just want to make sure that this doesn't continue as a ongoing trend. This might just be a one-off. If it's a one-off, it's not so bad, right? And if we will look at the price earnings cash flow book comparison, now this is where it gets a bit interesting here. Comparing the current numbers of the price earnings cash flow as well as book against itself 5 years average numbers, you'll see that it's actually a little bit higher than all of these 5 years numbers, with the exception of the price book, which is slightly lower here. Now, this means that comparing itself against its average value 5 years ago for all these three ratios, right, you will be paying slightly higher. You'll be paying slightly higher. Now, if we couple this with the understanding that Micron was a business in the last few years that was undergoing some challenges, now you could see that this company is actually on the way to a certain level of recovery. But the more interesting part is, if we do a comparison against the index, you could see that on a certain level, right, you're going to be paying for a company that is, by certain sense, right, cheaper than other companies in the index here. That is why, right, this company is even worth looking at after looking at all the numbers here. So at this point in time, we're seeing a company with some flaws in its cash flow, right, some flaws in its cash flow, and we're seeing that this company has a certain level of help, like a bargain against the index. That is why there will be some opportunities available in terms of like a cheap deal for the company. And we move forward here. Now, this is where some of you, if let's say, for example, you would prefer a company that's a strong, very strong, all out good news only, then you will be totally put off. If you just compare the trailing 12 months return on assets and equity against the historical values on year, this is enough to put a lot of people off here. But I just want to point out one thing to you here is like this, okay? Now, the stock market is not a function of the actual business activity. A lot of investors, a lot of traders like us, when we start our journey, right, myself included, we think that as long as the business is not performing well, the stock price will go down. But that's not the case. Sometimes, right, the case is true, but most of the time what happens is, as long as the business doesn't perform as badly as it is estimated to be, then the sentiment will improve and the stock prices will recover. So what we see now is, under trailing 12 months figure, return on assets and return on equity, right, is in the single digit region. Once these numbers shifts back to a 2-digit range, the sentiment might change drastically enough such that we can have a renewed sense of sentiments for the company. So this thus presents with us another opportunity from a different perspective. Now, but this is purely on a sentiments play. It's not from a run numbers play. So I do caution you here for the company, this company, Micron, that we'll be looking into. Try and only use your pay money, or if you really believe in the long-term as prospect of this company, then take the position later. All right. And let's see here. Okay, on the net margins aspect, right? This is actually the net margins showing chart for net margins. You see that this is not really fantastic, right? Previously, it was actually on a negative figure. This is 2019, 2018, 2017, 2016. So it's been improving, and then COVID-19 took a heartbreak on this recovery here. And this company doesn't have a very strong dividend trend here. So we can't rely on dividend as a way of basing our decision. This company, like, are we going to look at the dividend trend? No. Do not use the dividend as a way of basing your trade or basing your decision of this company, because the dividend trend is not long enough for you to use it to base a decision on. So under the Think or Stream platform, the book value for this company, we're looking at about $32. So, just a second. We're looking at about $32.94 per stock. So, and if we look at the, just a second, yeah. And we look at the probability analysis of the company under the last standard expiry for October, the company is expected to move one significant price movements, for those of you who understand statistics, of between $37 and $37.74 to $53.51. And if you were to look at $35 as a round number, there is about a 7.8% chance that the company will move its stock price right below $35. Okay, these values are down. If I mention this, you sound very strange, but as we look at this, the trades that we can explore, then this will make sense here. So what I'm proposing, or what I'm actually looking at for myself, is I'll be looking at two different choice of trades here. The more conservative one, which uses the book value as a defensive line, is the 32.50, 16 October standard expiry, with a current bid price of 25 cents. So if you have analyzed it, we can bring about a return of about 4.4%. So if the stock does crosses this line, I will take on the stock if I'm going to take the trade. And for a certain sense, because the probability analysis does show that the expected range, right, is about until $37 from one standard deviation point of view. And there's a 7.8% chance that the stock price will move under $35.08. So just taking a little bit more risk here, with a higher deposit of $3,500, we can bring up the returns to be about 7.75%, which is still higher than the current dividend yield of the company here. Now, this is under a cash cover put, which is like you're paying full for this. And if, let's say, for example, for some of us who might not like the story behind this company, or you do not believe in this, there's another way, which is you can do what we call a budget put spread, which is you do a spread which is between 35 and 32.50 with a lower deposit requirement, and that will bring us with an annualized return of about $48.53. Now, the point of the discussion is not on the trades here, so I wouldn't go too deep into this. So if you like to, you can actually look into our project option cash flows to look into the type of trades that you could be looking into and considering. The main thing is actually in the company's discussion for its prospect here. And so the things to look out for is that the debt level of the company is actually increasing. And like most analysis, there's a potential of value trap if they do not continue the trend of this recovery or improvement in this business. You must be willing to do a cut loss, or if you are part of an IMP community, you can do the IMP repair if you're comfortable with owning the stock in the long run. And I think that is what I have here. Terence, do you have anything you'd like to bring out as a comment to this so far?
Not really so much, but as all of you can see, what Jeremy has brought up, Micron Technology, it's somewhat an undervalued company, as you can see, but to a certain extent, it is an undervalued company with a little bit of issues that it needs to kind of kink up as well to clean up the entire image that the company has. But if you combine it with a little bit of the growth potential in the environment that it is in right now, then things may kind of balance out a little bit because the theme of the market right now is how do we say this, internet adoption in 2 months, what would expect to take in 2 years in the past. Yeah, okay, all right. Now, so things are moving very fast and getting online very fast right now. And when things move so quickly online, many companies or many websites and all these stuff needs to start hosting a lot more online. And this requires a lot of servers and stuff like that. And all these are basically run with the back end support of these drives from these memories from Micron itself. Now, so if you look at the end market trend, which is right now, technology is rapidly helping the society with changes, right? Which is of course caused by the pandemic. So we have a faster pace of digital transformation that is happening right now. And the thing is also this: governments across the world is basically saying that we should not expect things to go back to normal. It should be a new normal, which means that this digital transformation is somewhat here to stay. And you can also think of it, many major corporations have probably held back on this digital transformation for years, and they are now sparked to move things because of this situation. And once they actually put money into moving things, they are probably not going to stop even when things resume back to somewhat normal over here, right? They're going to continue to spend, continue to build, and then continue to make sure that they become really, really good in this thing that they've already started spending money on. The next thing as well is, for the second half, all right, what we call the data center outlooks have been very healthy. And together with, smartphones as well as consumer end units have shown that, sales have started to improve, not just for Micron, but also, as a whole. So these are what will drive what we call the DRAM as well as the NAND demand over here, which is the main product of this company itself. Now, the only issue right now is we have what we call the short-term visibility, right? As we know, many companies have pulled out their forecasts because of the uncertainty, all right? So this causes a little bit of pressure and stress and also volatility when it comes to Micron stock prices. All right, so on a good day, the prices will jump up very quickly. On a bad day, it kind of moves down by quite a lot over here. Now, so my students will probably be able to associate with this. Basically, Micron is moving very similar to like what Qualcomm did 1 to 2 years back. All right, it's always been a great company with great strength, but it is also one of the more volatile stocks over here. All right, now, apart from that, in the long-term outlook, DRAM industry has demand, all right, NAND also starts to have demand, all right, but on top of that, the good thing about this company is they're actually spending a lot of money to differentiate the normal products by offering kind of more premium products. Because as we know, right, when it comes to technology, it is famous and it's famously known that, especially when it comes to chips and memories, margins have always been very tight. As you can see, most of the laptop manufacturers like Dell, like HP, like even Acer, their profit margins on every laptop sold is actually not even double digits. They're all in single digits. So what they're trying to do is actually to drive volume instead, volume of sales. This is also one of the reasons why you'll probably see in the last couple of years, if you actually went to any IT fair or stuff like that, and you're trying to snap a bargain on a laptop, you'll realize that the bargains usually come in the form of freebies rather than a price deduction, right? Because the margins are already so tight, they really cannot bring down the price anymore, but they're more than willing to throw you a free mouse or a free pad or something like that, because those cost them like $1 or $2 on the back end. All right, so it is definitely much more worth their while than throwing you $100, $200 discount on a really tight margin. Yeah, okay, so Micron is similar, but in the form of memory. So they're operating under a very tight margin. So one way is, of course, to differentiate themselves which is to try and offer more premium products. All right, now, so more premium products right now, the clear stage will probably be, your Apple MacBooks. And then right now, more recently, will be probably your Microsoft laptop series as well. All right, so this have been priced at a higher point than the normal because they have already achieved what we call differentiation. All right, so Micron drives the general business as well, but at the same time, they are also trying to come up with more premium products as well. Yeah, okay. Now, so I think one of their more premium products is what we call the quad level cell memory. So that's something that they're still producing right now, and they're trying to break further into it. So the good part about the company is, of course, they have reported better performance, right? Started to report better performance over the last couple of quarters. And, their main source of their memory are still single state drives, which is SSDs, which are definitely becoming much more popular, right now. Okay, now, and then the next one is, your data centers and networkings, as well as mobile. And even you'll be surprised to find out that, even PC and graphics, all right, are making use of this. But one sector has been pressured. One sector has been pressuring Micron's performance, and that is the automotives. All right, actually, Micron produce a lot of automotives parts to the smart drive technology, right? Which means now a lot of companies are trying to do the self-driven cars. All right, so Micron was actually supplying these memory chips to these major car manufacturers and developers. But of course, we all know what's happening to car sales right now. So this has been one part that has impacted the business. And also as a whole, this memory sales has been known and famous to be a very cyclical business and a very capital intensive business. Yeah, all right, because you need plants to be set up, and plants requires a lot of money. All right, and then new machines to manufacture new technologies, all these cost a lot of money as well. Yeah, okay, so that's why it's a very capital intensive kind of nature of the business, right? So they need to spend a lot each and every year to be able to keep on top of things. Yeah, all right. So when sales starts to get impacted a little bit, they will start to have very difficult years, like what Jeremy mentioned in 2019. All right, that's probably because they had spent a lot, but the sales hasn't really improved, so that has impacted on the overall performance there. Yeah. Okay. Now, so if you really want to look at it over here, the fundamentals. The interesting thing is this: if you are purely fundamental over here and you want to have a target price based on, like, for example, using PB, PE, and PNS ratios and stuff like that, right? You'll be surprised to find out that there is actually kind of like a targeted price put out there on Micron at well over $60, and it's actually trading at like $40 over right now. So that's just like still like a substantial discount that the market is putting on the stock, right? Because you actually have analysts from even Goldman Sachs, JP Morgan, and Morgan Stanley as well, right, putting target prices of Micron at $60 levels, right? $60 levels, right? So that's what analysts feels and thinks of Micron's stock price itself. So weighing the pros and cons, I think like what Jeremy said over here, if you are able to accept it and accept the volatility of the stock, you actually can look at taking what we call measured risk trades on it. That means do not leave yourself open unless you're comfortable with owning the stock in the long run. But otherwise, you want to take what we call defined risk trades over here. Now, so let me share with you my trading screen right now and dictate a little bit of what I'm trying to drive at, okay?
Yeah, meantime, as Terence sets up the screen, right, and maybe just leave your questions, and we have noted some of the questions. We'll address them later during the Q&A as well.
All right, now, okay, it's up. Now, so as promised over here, most of these sessions, Jeremy will cover the fundamental components, and I will share a little bit on price points and, targeted levels. So if you look at the charts that I'm sharing on my screen right now, Micron was trading in a very narrow channel range, right? In fact, this range was so narrow that it was between like $52, all right, a high of 53, right, to a low of about 47. Right, so it was trading among that 47 to 53 kind of levels over here, right? And that started to occur after Micron kind of released their last earnings to the public. Yeah, okay, all right. Now, even before that, right? Even before that, it has already started to move in this particular channel. But what has happened this week was we actually saw a break, right? We actually saw a break of that movement on Friday or Thursday, sorry. Okay, we saw a breakdown of that movement on Thursday, right? Which means now that the support that we have over here at 47 has been broken, all right, has been broken. Now, so any support that is broken becomes the resistance, all right? Now, if this is a little bit complicated for some of you, just think of it this way. If you're living on the 10th story, right, and you happen to go below the 10th story, so now you have fallen to the 9th story, right? But essentially the 10th story floor became your roof on the level 9. Yeah, okay, so this is what we call a similar concept over here. Right now, so right now, if we expect Micron to go back up, it has to first break back above 47. Right, so it has to break back above 47. But otherwise, it should start trading in the channel of this lower support right now, which we have here, right, at 42 to 47. Right, so right now, we may expect it to come down a little bit, but it should come down to about 42, and then it should bounce from there, which is the last support level that the stock made. So right now, I'm basically expecting Micron to trade anywhere from 42 to 47 until, right, it shows that it can break back above 47. Okay, because over the next couple of days, if it starts breaking back above, that means this is what the technicians will call it basically as a false break. Yeah, okay, a false break. Yeah, okay, now, so it might just be just 1-2 days of shake off over here, and then that strength resumes. We won't know until the stock does it for us to see. Yeah, right now. So that's why charts are basically based on backwardation or back results over here. Now, but having said that, that means also right now we have a support at 42. But in COVID, all right, they have obviously formed a bottom at 30 as well. Okay, at 30 as well. Okay, now so we have like 42 and 30 right now, which are kind of forming the support. And I also want to show you something very interesting, all right? Something very interesting, because if I were to drag the charts back all the way to 3 years, all right? Okay, if I were to drag it back all the way, drag it back all the way to 3 years over here. Let me enlarge it. Yeah, okay. Now, so you'll see that actually, right? Micron at $30, all right? Micron at $30 has been a very, very strong support for the last, did they do it? Yeah, it's 3 years. Okay, let me minimize it. Yeah, all right, so Micron has had this like $30 support as a very strong level over here for the last 3 years. All right, and coincidentally, the March COVID crash brought it all the way to 30, all right, and then it strongly rebounded from 30. Yeah, okay. All right, now, so while I believe that Micron and its undervalued nature should hold its prices, but we must always take care of the worst case scenario. So if the worst case scenario does come about, all right, we'll probably see the stock, hit a low of 30. All right, that's the expectation on the low end. Okay, now, so with that being thought out, the trade that I'm looking at, all right, possible play over here on Micron would actually be something slightly longer. Right, that means if you look at all the way to January next year, all right, and you're looking at like the 35-30 strikes, okay, 35-30 strikes, okay, you could actually establish something along the line of, you see, if I sell the 35, okay, right, if I sell the 35 and then I pair it up with the budget put spreads, like what Jeremy said, the 30, okay, I can actually be looking at somewhere along the line of a 79 cents credit. Okay, a 79 cents credit for a $5 Y. That means in this budget put spread, it comes with what we call a maximum risk, and the maximum risk is capped at $5. Okay, that's the difference between the strike prices over here. Okay, now so with a maximum risk of $5, right, I'll be able to sell this put spread over here, all right, and pocket like almost 80 cents up front. Okay, 80 cents up front. Now, so if you work out the numbers, okay, just from a simple strategic point, that means you're pocketing about 80 cents divided by $5 investment. You're looking at 16% ROI in the next 4 or 5 months, actually. Yeah, okay, in the next 4 or 5 months. Okay, because this trade would last about 152 days. right? So if you take 152 days divided by 7 days in a week, we are looking at about 21 weeks over here, right? 21 weeks, okay, 21 weeks. So if we divide it roughly about 4, yep, that's about 5.5 months, right? So you're looking about 16% return on this particular trade structure in about 5.5 months over here. Yeah, okay, so that's kind of the trade I will look at in terms of with this stock over here. Yeah. Right, so Jeremy, that's my take over here. Now, if any of you have any questions, you can bring it up into the comments box. Even with, for example, if I pick the 35, but you believe that there is something better or something you want to look at, all right, feel free to put it out in the comments because we leave this to the end, all right, so to help us address these questions that some of you may have. Yeah.
Right.
Now, sorry, Jeremy, once again, before I move ahead, right, these will be purely a little bit more of the speculative play, right? So it will not form the basis of your core portfolio over here when it comes to Micron.
All right. So I think what we've mentioned here so far is pretty straightforward in terms of our stance here, our attitude towards Micron as a company. Now, maybe I just want to bring up a different perspectives which is part of my research when I was preparing for today. Just let me add it to the screen. Just a second. Yeah. Right, this is the Simply Wall Street platform under Micron, right? You can notice that this last update somehow or sometime just earlier today. And basically the website, what it does is it actually trawls the net for a range of data. And they do come up with their own valuation in terms of this company here. Right, so for Micron, this is what they view. They view that the company at its current price of $45 is drastically undervalued, whereby they feel that $150 is about the fair value here. Now,
that's excessive. That's excessive.
Yeah, that's excessive. Yeah. So actually, I was thinking when I was preparing the slides, right? Should I actually raise this, or should I actually include this? I don't want to because, my rationale is like this. Okay, the company has shown that while it is profitable, right, it hasn't been able to establish a very consistent range of its profits, its income, net income, as well as its revenue here. So if we were to showcase a side of the story that is too one-sided, and with this also, our concern is that the participants will actually be too optimistic and take on much more risk than they should be. So we want to have a balanced view in terms of how we actually look at the company. Yeah, so actually looking at the company itself, by some of the risks that they were actually pointing out for this website, right? They were actually saying that the profit margins were lower than last year, and this is all they had so far. So if I were to base my research purely on this screen, the company would have a huge, a more bigger sum or a bigger portion of my portfolio invested in as well. But my stance towards Micron, I think first time I'm actually going live with this is that with Terence as well. Sometimes when we look for trades every evening, I haven't been very comfortable with Micron for a trade myself because of the market situations in terms of their volatility conditions there. But I do believe in the story of Micron whereby it just makes us viable long-term play. I must emphasize a long-term play. If you believe in the story of a stock that it's going to benefit in the long run as its downstream clients who benefit from their technology, their products, right, slowly recovers from this pandemic here. So my point of sharing this is to let you guys know that, hey, there are actually views out there that says that Micron is very, very undervalued. But we would prefer we take a more balanced view so that you do not burn yourself so much if you are wrong. Okay? Right. So maybe we try and address some of the questions here. Let me just.
Sure, Jeremy. Let me pick out the
Yeah.
first one. So I think Chien brought up, can we do a deep dive or R&D with their competitors? I don't have the stats of their competitors and what their R&Ds, what they are matched up according to their competitors. But what I can share with you is a little bit of what they've been building. So Micron has been working on what we call the high introduction of high value innovations when it comes to DRAM and NAND space. So memory chips are a little bit of a commodity right now. So when it comes to commodity, right, people fight on the term of prices. So if you offer the common product, then of course you have a price war. Okay, you have a price war there. So it's like, if HP and Dell issues a computer, you are basically a price war. It's just down to the specs. Now, but what they're doing right now is they're trying to increase the product, the quality of the product and what it produces to kind of improve the mix and reduce, the pricing impact that is associated with what they sell. So, in DRAM and NAND, right, they're starting to make improvements. So it helps them to produce like leading edge technology nodes when it comes to these memories. And on top of that, actually, they are working on advancing these nodes over here so that they can improve the efficiency and also reduce the cost. So the idea behind this is they're working to introduce a high bandwidth of DRAMs to try and capture the growing AI community, right? Because now, AI is basically in a growth stage right now, artificial intelligence. So they're trying to capture that space over there to be the go-to demand place. All right. Now, also, they have succeeded in dramatically increasing the percentage of high-value solutions in the NAND business. Right now, so they basically aim to continue to provide and continue to capture bigger market share there. Okay, now one of their next thing right now that they come up with, like I mentioned earlier, is the quad level cell. And the quad level cell now makes about 10% of the total NAND production itself. Now, so basically right now, right, the company itself is targeting providers of read-intensive applications, okay, for this quad level cell. Because with this technology, right, it can store what we call 4 bits per cell, which is even higher than the current 3 bits triple level cell. So it's a bit technical, but think of it as this way. It's like Intel and AMD trying to fight on processor chips. Yeah, all right. The thinner it is, the more kind of production it comes up with and something like that. So this is just in association with memory chips itself. Yeah. Okay, now, so that's basically what they're trying to pump themselves into over here. All right.
Terence, if I can just offer my
Sure.
take on that, right? So, I think a lot of our participants who comes in, right, they would have been exposed to the different school of thoughts or the other sharing by the other trainers out there. What they say is that, we will give you all of the different news out there for the companies that they are sharing on. I think it's a good thing that what they're doing, right? But my personal take is that because of the choice of the instrument that we use, which is the stock options here, it allows a certain level of shortcuts and a certain level of cushions of safety that we can do, because we will be able to do a certain level of, like a low ball kind of offer for any trades that we take on. So when I was running through the analysis of the company, right, to be very honest here, I didn't really need to look at the R&D now, the news on this company.
Yeah,
as long as the numbers on a broad spectrum, right, they make sense to me, and barring any criminal activity in place, I should be reasonably priced for any positions that I take on. Yeah. So this is going to be very different from what a lot of participants view, because they will say that I need to know more. I think here, maybe I just want to share. You need to be able to focus on what is the purpose, what is the output you want to achieve. End of the day, right, if I were to put it very simply, you just need to have a yes or no when you are on your platform, right at the screen whereby you click whether to submit the trade or not. And then all the different researchers, all the different news that fits into your decision matrix here. So yes, having more information does help you. And I do agree that some of our participants, even my friends who trade together with me, they like more news and they can perform better with it. But for me, I don't, because it does confuse me and does makes me go into the analysis paralysis mode sometimes. So I try not to. Yeah.
Okay, no worries. All right, great. Thank
Yep.
you very much. Now, Will's question, why do I choose 35, not 33? It's just a choice and preference. Now, you must understand when you are an option seller, the lower you push the strike price of the put option, the lesser premiums you're going to collect. So I just feel that 35 is a decent, strong enough place, because to be honest, I expect $40 to hold. All right, I expect $40 to hold over here. All right, if it doesn't, then it should test the low. Right, but even when it tests the low, I expect it to rebound very quickly from the low, like what it has done a couple of times in the last 3 years. Okay, because one, if the company's profitability is improving, right? Okay, that means that it won't be as negative as what it will look like on the company over the last 3 years. So even if it gets back to somewhere around the lowest price, it should bounce quickly. Yeah. Okay. All right. Now, so that's just one of the reasons why I don't feel like I don't need to go to 33. But if 33 makes you feel more comfortable, by all means, right? Okay, it doesn't harm for you to do so, right? You just need to be happy with the ROIs on the trade. Yeah. All right. Because every option you sell provides a different or slightly different ROI calculation. Right. So do your ROI calculation and then feel that, what's comfortable for you. Okay, now Isaac's question, $5 a max loss is quite high. It depends on how you look at it. All right, depends on how you look at it, because I may set a $5 max loss, but I may value the opportunity or the probability of that happening to be like less than 10%. All right, so what I'm trying to do is I'm trying to still cap my loss, but I really don't think it's going to happen by January next year. All right, so I don't want to go too far as well, because the risk becomes too high. But so that offers a good, kind of like a risk reward returns that I can make out of that trade, because a 16% ROI trade on a max loss of $5 with a 10% probability, it may sound a little bit complicating, but that's just how we throw numbers in our head. Yeah, all right. So like a little bit like Jeremy. Rather than spend too much time on deep diving on R&D performance and stuff like that, you must understand we are a little bit different. That means we are option sellers. So I'm actually not even looking for the stock to go up, because if the stock goes up to 100, like what the analyst expects, right, I'm not going to make anything more. All right. So I'm more concerned with where I feel that the stock will not fall to. Yeah. Okay. So once I find that place itself, all right, that's where I'll pick my spot and I'll start calculating, the risk and what is the probability of failures when it comes to that strike. Yeah, all right. So we are a little bit unorthodox, but once you get the hang of things, right, the thought process behind each trade doesn't change anymore. All right, that's where it starts to become simple for us. For those who are new, yes, you need to learn something new, but it becomes a repetitive decision-making process. Right? For example, if Coca-Cola is selling Coke, they're still selling Coke. Right? All they need to think about is, should I put more resources into this country? Should I put more resources into that country? How do they come to that decision? All right, they rely on all their past experiences. Right? What are the matrix that they look at? What are the numbers that are coming in right now? Should they put more allocation? All right. So being an option seller is something like that. It's just repeated occurrences over here. Yeah. All right. Back to Will again. All right. A long-term play. DTE to January 21st is too short. All right. Again, Will, all right, you must differentiate. A long-term play for a buyer and a long-term play for a seller is totally different. Yeah, all right. Because if I'm trying to be a long-term play for a buyer, then I'm looking at 2 years, 3 years, 4 years for the stock to realize the potential of the $100, website view that Jeremy brought up. Okay, but if I'm expecting it just not to go below 35, all right, then by January, it's 5 months is already considered long. Yeah, okay, all right. Just that I find that it's decent enough in case the market goes into a correction mode immediately after this weekend, right? I won't know, okay, but with 5 months down the road, I believe that it can recover. Yeah, okay, and whatever I'm selling will still expire. Okay, now so that's why to me I call it a long-term play over here. Yeah. James, average growth of the last 3 years. Jeremy, you want to tackle that?
Yeah, I'll take that. All right, so if you can see from Morningstar, the 3-year annualized, right, as concluded on the August 2019, right, we're looking at the revenue. 3-year annualized is 23.59%. And the operating income, we're looking at about 217%. So this is an annualized figure. It means that across the 3-year period and average every year, this is the value. Yeah. Okay. And also maybe I want to take on the other question here on the price EE. PE22 is quite high, right? Okay, so now under PE, right, price earnings, right? Okay, so whenever you do any comparison in terms of fundamentals analysis, right, it's always good to make sure that you are looking at it in terms of relative numbers so that you can get a feel of itself. So let's say, for example, I put our national marathon runner against all our national other runners, right? He will definitely be the leading pack. But if I put him amongst the international runners, right, he might not be as strong or as fast as it could be. So a lot of things is on context here. Okay, so price earnings of 22, right? Yes, some people will view it as very high, but if I were just to compare it against the index, right, it's not too much higher. And furthermore, okay, if you deep dive further into how price earnings is derived, right, it's the price of the stock against the earnings of the stock now. So we have seen earlier during the sharing that the earnings of the stock has taken a slight beating because of the overall market situation now. So because of that, right, the price earnings across board, not just this company, not just Micron, all other companies would actually be higher now. So we just want to make sure that Micron is not too much higher and we are not overpaying too much higher in terms of the price earning aspect, and we should be fine. And the same for price cash flow, price book as well. We need to understand, first of all, are we overpaying against its historical value, against its other competitors, other companies in the index or against in the industry? Then we also take a look at how the formula is derived, and we understand like whether the changes, whether the current value, is it a difference because of the denominator? Is it because the earnings has went down? Is it because the cash flow has went down? Things like that. Yeah. So I would say that maybe TE is high on its own if you look at it on its own, but in the current situation, I don't think it's too high of concern for me. Yeah.
Okay, all right, now, so let me tackle Will's question again. All right, no consideration of delta value to get a higher probability win rate. Again, Will, you're looking from the buyer side. Okay, you're looking from the buyer side because delta changes. Delta basically tells you the change in the option premiums on the stock movements that you get. These kind of what we call option Greeks, they are very, they are what I would say a necessity when you're a short-term trader or you're a speculator with options. All right, that means you're trying to trade options on the shorter term or you're trying to buy options and try to profit from it. You need to pay attention to delta, right? It has a certain effect. Okay, but when it comes to selling options, it plays a much lesser role when you have an objective and a view in place. So earlier, like I mentioned, I don't believe that the stock will fall below 35, right? And if I go to the broker's platform and I can find a decent premium on offer that gives me a decent ROI on structuring a trade, right? Then delta, doesn't really matter to me. All right, it doesn't really matter to me. Right, so different strokes, different styles for different type of investors. Just like in technical analysis, right? You can be asking this question, Terence, why don't you use RSI? Right, I don't because I just look at other things. Yeah, right. So every trader has its own style of things that they use, right? And one thing that I do over here is I focus on the simplicity behind being an option seller. All right, and despite focusing on simplicity over here, our 7-year mark right now, and we're still driving over, a 95. In fact, still driving our 99% success rate over here. Right now, so that is enough for me. Right, I don't want to add on things and complicate things where it doesn't it doesn't really makes it worth the while. Yeah, right? It doesn't make it worth the while, because you must understand, as option sellers, we are not trying to hit home runs, right? We are trying to bet first base, second base, third base, then reach home, and then start first base again, and then second base, and then third base, and then reach home, right? Sorry if you're not familiar with baseball, but it's just something like that. Or in the form of a basketball game, we're just trying to score 2-pointers all the time. Yeah, right. But every time we attack, or every time I put my money to work, I'm trying to score that 2 points. Yeah, okay, all right. The ball that I shoot should not be the game winner. It should be just adding 2 points to my score. Yeah, okay, now that's how we want to focus as an option seller over here. Yeah, okay. All right, Jeremy, do you want to do this?
I am actually looking at what Maureen is asking in terms of Western Digital right now. You can see that I didn't off my screen, so I'm actually looking at it as live. We also have another question by Uncle Fu earlier. So he's concerned on the fireside chat that I think CFO of the company has mentioned that the estimates will not be, the actual numbers will not be able to meet their estimates. So I think the choices of the strike prices that we have chosen earlier during our sharing has already factored those volatility, because I could see that there was a dip on the day of the announcement itself. Yeah, so that is my answer to that. And across board, right, I'm not too concerned with one quarter for the company. I'm more interested in the whole story behind the company. Yeah, that's my take to answer a question. Let me look at Maureen's question here.
All right, now, so let me just step in while Jeremy forms his final view over here. Welcome, Will. All right, welcome. All right, just like I mentioned, different strokes for different type of investors, yeah? So we focus on different things. So I'm not sure what Jeremy is going to come into, but I just, the way I quickly look at it over here is, I would say there's no age between either. All right, okay. I mean, personally, I don't find an age between either. Just I would say what kind of a trade are you able to find on each of the stock? Okay, which means both the stocks should be traded under your more speculative side of your portfolio. All right, now, so if you're going to trade one, just go with that one. All right, and then you should not trade the other in your portfolio. Right, it should be one or the other kind of trade. So it just so happens that we picked up Micron to discuss today. All right, so we are kind of like putting out a trade on Micron. But for example, if just so happens that next week Jeremy says, "Oh, let's do a WDC," all right, and then I may actually tell him, "Let's not do it." All right, not because it's not worth doing it, but because we already did a Micron. All right, and if we do put out a trade suggestion on WDC, then people may end up having both of them in their portfolio. All right. Okay. Now, so just something like that.
I think here, right, this is the best part about this sharing here, because this session here, because it does shows that this is not staged, because we don't really have time to 对口供. I really don't like WDC.
No, it's nothing is rearranged.
Yeah, it's not rearranged, because I was looking at it, right? If you have noticed my facial expression earlier, for me, if I am gonna look at the company, right, it's really hard to justify that, because number one, compared to Micron, of course, compared to Micron, okay. First of all, profitability for the company is on a negative scale, and in terms of operating income, right, it's actually contracting for the last 3 years annualized. And the fact that the financial health, right, for the quick and the current ratio is actually not as healthy as Micron, it really does makes this challenging to justify as a suggestion in terms of a long-term play. I must emphasize long-term play, okay? Because once we come to the understanding and maturity as an option seller, right, you will have what I call different pockets of different strategies you pick up for different type of trades you take, be it an opportunistic day trade whereby you take a short-term trade from the volatility spike, or you take a long-term trade from the numbers, from the story, like what we're looking with Micron now. And if I can just focus on the price, earnings, cash flow, and book ratio, right? You are really for WDC. This is really overpaying. 96 versus 24 for index. 96 versus the 40 for the higher average. This is what I mean by overpaying. Yeah. So I don't want to be a wet blanket here, but I really don't like WDC when compared to Micron for a long-term trade. WDC for a short-term trade, we do issue them sometime from time to time during this, I think, last 2 to 3 weeks time. Yeah, but as a long-term play, no, I don't fancy it. Yeah.
Jeremy, let me come back. I just had
sure.
a look. I just had the time to match up 2 screens together. All right, and yes, I'm not. WDC will be a trade that I will take if it suffers like a humongous drop suddenly. Okay, but otherwise I won't be repeatedly trading the company. Okay, because there must be a very strong reason if I'm going to trade WDC. Okay, because basically I saw something over here. All right, give me a minute, yeah? All right, I just want to share the screen. You can verify that for me, okay? All right, Jeremy, because you are the fundamentals, right?
Sure.
Give me a minute.
Anyway, thanks for the question, Maureen, as well, and Uncle Fu as well.
All right, Uncle Fu, STX and WDC, I don't think, if I have to make a choice, right, I somehow would still go with Micron if I have to compare all 3 of them. One, because, okay, let me take out Maureen's. Jeremy, why? Do you see what I'm trying to show?
Let me see. Sorry, I had the screen because presenter screen is a bit different.
I'm trying to make it bigger now. Give me a minute, yeah. Okay. Okay, what I'm trying to highlight is I can't use this to draw. Okay, but what I'm trying to highlight is this. I'm not so much looking at their revenue because companies of different sizes may generate different sales revenue, but it doesn't mean that they're not profitable or not doing well, right? Okay, but what I'm trying to drive at is the gross margin and operating margin. Can you see the stark difference? The one on top is MU, the one on top is NMU, the one below is WDC. Can you just look at the gross margin percentage and the operating margin percentage? Can you tell me which is going to be a more survivable business? Yeah, so this just stood out to me, all right, because I just managed to match up the 2 screens, up and down and look at it, right? Because we're doing this on the spot. So sometimes, trying to analyze it, we may overlook at certain things. Yeah, right now. So I just spot this and I realized, WDC is in a very, very tight margin business, even tighter than Micron. So it's basically going with a price war. WDC is just price war. Yeah, all right, it's very obvious. But as you can see now, Micron still is able to have some kind of decent profitability because I think, Jeremy, gross margin, which is the product's margin, right, at 45%, I think it's still decent.
Yes.
I think that's a very a very good margin for. Yeah, that's a very good margin.
Actually look at the net actually.
Yeah, no. Because if you look at for example, if you look at the operating margin, that will incur all how they spend their money, how they manage the company, and everything, right? Yeah. Okay, but I mean, we just look at the very gross one, and if they can make about 45%, I think it's decent. I think it's actually quite good. Yeah, right. Because you can obviously see like WDC is like at 20 plus percent. Yeah. All right. So. Yeah, let's since Uncle Fu mentioned STX, which is a direct competitor to WDC, let's have a look. Similar, right? So you can start to see why I say if I have to choose, right, I would prefer Micron over the 2 of them. Now, through the fact that both WDC and Seagate actually offers investors dividends, and Micron may fall short of that. But if we look at the survivability, then Micron seems to be doing a little bit more than these other 2 companies, just from a standpoint. Yeah. All right. Now, so I think that's what I have. So back to. Sorry, give me a minute. Just back to Will again. All right. Yes, that's right. Delta is used a lot if you're trading intraday. Yeah, all right. Because if you're intraday, so you'll probably be deciding whether to buy and add the money option, one strike in or one strike out. All right. And then you need to match it up with what's your expected targeted move of the stock. So how will the movement change the premium of the option and whether you can be profitable or not? Yes. I'm not going any further because I'm sure I lost a lot of people in that statement. All right. Okay, great. All right. Now, Maureen, no worries. Welcome. All right. Okay. Now, just a very quick, on the spot kind of comparison, if we can help over here. All right. We do whatever we can to, try to assist not just our graduates, but also, non-graduates who are joining us in the session to learn more and make better investments. Okay, now, so just some news over here. Just some news. We are in the pipeline because we have received not only a lot of comments, but kind of emails as well. All right, so we have decided that we are going to set up a public group. All right, so we're going to set up a public group sometime in the week ahead. All right, to promote discussions of, not only sessions that Jeremy and myself runs, okay, but also perhaps cover a little bit of options strategies and options investing, because that's mainly our expertise and our experience. All right, so we will set up the Facebook group, and hopefully all of you will join us in there, and we will also start to stream our live sessions from the group itself. So when it is up, all right, joining the group would get you notified and also allow you to interact. All right, it'll allow you to interact because Jeremy, myself, as some of the moderators which we have lined up, right, we'll start to generate and put good content out there into the group, right? And, we hope to get more interactions with aspiring option traders as well as stock lovers as well. Yeah, all right. Yes, it's going to be a public one on top of the graduates one, all right? Okay, so it will be a public one where we try to promote discussions and more things about options trading. Yeah, all right. Now, so that's the end for today's session over here. Thank you once again for joining us. All right, and we look forward to seeing you in the next session in the following week. All right, Jeremy, anything to add before we close the session for today?
F.
Yes, go ahead, Jeremy.
I was looking at the WDC, right, when Maureen pointed it out, right? I think it would be worthy as a kind of like a long-term, once in a while, take a look at WDC. Once WDC maybe rise out the short-term issues that it has right now, and when the short-term numbers, the short-term ratios looks better, then that might be a good timing to actually have WDC in the portfolio as the wrong one. Because by then, right, WDC will be in a similar situation as what we have for Micron now. So just take and maybe keep WDC in the loop at a distance here, and just pay a little bit of attention on the developments of the company, because it is actually a very interesting look after what I was looking through with it. Yeah, because it's actually priced. WDC is actually poised to it's actually undervalued in a certain sense, right, by simply Wall Street's estimates, right, because of their future projections. It's only my maybe only concern that it's hard to justify a position now because of these current numbers. So once the current numbers start to improve and it shows that it's actually able to ride out the current issues now, then WDC will be easier to sum up for a trade. Yeah, that's my take.
Okay, great. Now, so some of you are already asking for the link. Thank you very much. We are in the midst of setting up the group and making sure we have it up and running. So please make sure you're part of our Telegram channel, right? Because once it's up and ready, we will put the invite link into the Telegram channel, so all of you can join us from there. Right. Otherwise, do stay tuned to our next live sessions, which the next one will be tomorrow, where I'll be doing Cashflow live with Terence. Okay, so if you're looking for a trade on portfolio stunts, all right, which means an option sell for cash secured puts, right, that generates double-digit returns on an annualized basis, right? I'll be running the session tomorrow evening at 9:30 p.m. once again on Facebook Live. Right, join me for the session, and also make sure you're part of our Telegram group as well. All right, now, so thank you very much, and we will see all of you in our next live sessions over here. All right, have a good weekend, everyone. Bye-bye.
Bye-bye.
All right, if you've enjoyed the sessions, just drop a comment, let us know. Yeah, all right? Okay, just drop a comment and let us know. All right, bye-bye, everyone.
Bye, everybody.